Morning, Steve Free in Chicago with the morning grain comments. We have kind of a mixed trade overnight. We've got beans up a little bit, corn down a little bit, wheat unchanged. Outside markets, the dollar is better, and equities are better, and some of the commodities are a little bit lower, led by crude oil. IMF lowered their estimate of the world economic growth again for the third time this year. We have seen them kind of the talk of move, of concern about global geopolitical issues, making some of the money moving out of world equity markets and into commodities, and because of all this uncertainty. So we're also seeing some concern that maybe the dollar is topping, and that's helping commodity prices too. And it seems like one of the things that they're looking at to buy is the grains first. As far as specific news overnight, yesterday during the rally we saw some pretty good farmers selling of beans in the western Midwest. Today we might be seeing a little bit of firming up on those that we're going into the report looking for a bearish USDA report, looking for lower bean prices, looking for lower volatility, and may have to buy futures if they're short option plays. Over in the corn at the Gulf, we saw Gulf basis levels collapse yesterday. There is talk that there's corn at the Gulf that cannot load because of the lack of capacity. We're just loading too many beans, meal, and sorghum out at this particular time. So that's kind of backing things up into the country. And we continue to hear good corn yields, which adds to the supply. As far as wheat is concerned, we're still kind of figuring out globally the quality issues, and also figuring out if we're starting to look ahead 2015, and maybe there'll be a little bit lower supply than there was this year. But it just seems like we're seeing a short covering rally in the wheat, and part of that may have to do with just concern about some crop productions in Argentina, crop productions in Brazil, and crop productions in Australia. As we move forward, the number one thing that we're going to be watching is the USDA's report on Friday. They're going to be looking at acres, they're going to be looking at yield, they're going to be looking at demand, and all that results in some kind of change in the carryout. Markets really doesn't know what they're going to say. You know, what if they lower the acres but don't have enough harvest data to raise the yield? What if they raise the yield more than people expect? What if they raise demand to offset the higher supply, even though that doesn't look like that is happening? So it's going to be a big report. It's going to be a volatile market reaction, and we'll come out as soon as the report's out with the market reaction. As far as weather is concerned, we've got the rains moving across the Midwest in the next couple of days. Looks like it's shifting a little bit further south, so it's going to be heavier in the plains, the Ohio River Valley, and the eastern Midwest than it is in the northwest Midwest. So farmers there might be able to get some more harvest done. Extended models look a little warmer and maybe a little drier than they did yesterday, which should help harvest. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trade.